Okay, recording video on Saturday, the 1st of July, 2023. Just gone 9:56 p.m. Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. Been waiting a couple of hours to do this video because the dog next door, called Bogart, has been very yappy. And my noise cancelling is pretty good, but I'm not sure it was good enough to get rid of his yaps. But anyway, so hopefully he'll shut up while I am recording this video. Anyway, hope your trading is going well. If you celebrate the 4th of July, hope you're enjoying your weekend and your celebrations on the 4th. If you're Canadian and you celebrate Canada Day, hope you had a great Canada Day. So we're in the middle of a bull run, a very nice little bull run, and we've also got a seasonal overlay happening at the moment, which is the 4th of July seasonal trade. If you want to know more, there's a couple of pages on the Emini-Watch website I would refer you to. So the first one is the stock market seasonality indicator, where you can look for 5 seasonal trades that are pretty reliable. Here they are: Santa Claus rally, tax time, 4th of July, September effect, and Thanksgiving. So this is the 4th of July. Usually around holidays, market tends to be bullish. It's just because people's moods are elevated. They're having a good time. So the market tends to rise during those periods. So the 4th of July is one of those. If you go to this web page on Emini-Watch, I'll link to this in the description. You can read about those seasonal trades. You can also get reminded of them by using the calendar on the Emini-Watch website. So again, another page I'll link to in the description. This is the Emini Futures page. And if I go to the very bottom of it, we have a calendar here. And if you use Google Calendar, or I think other calendar programs as well, you can import this calendar. I update it every year and it shows you the different seasonal trades. So here we are in July, and we've got a seasonal trade going on. Starts around the 1st of July, runs to about the 8th. During this period, in general, the stock market is bullish, and we actually have the rollover days and the trading day holidays marked on this calendar as well. And you can see on the 4th, we're going to have a trading day holiday, which means probably Monday's trade is going to be pretty light because people will be taking a long weekend. Anyway, so there we go. A couple of pages on the website that you might be interested in if you want to follow these important times. So a couple of things to say about this video. We're not going to go through the E-mini first. I've had a couple of requests to use the NASDAQ instead. So we're going to use exactly the same better indicators to look at the NASDAQ charts daily all the way down to the tick bar charts, and then we'll roll through each of the 15 futures markets on the tick bar charts, and I'll show you the signals that went off this week. Settings will change a little bit for the NASDAQ charts, but the story in general is almost identical to what we've seen on the E-mini. I like the E-mini because I think you should always be looking at the most liquid market. It's useful to look at the 4 major indices, the E-mini, the NASDAQ, the Dow, and the Russell, because they do move a little bit differently and they have different turning points. But when I'm charting, and in general, this is what you should be doing for all of your charting, is you should be charting the most liquid market, because that will have the largest number of professional players in it. So as an example, people talk about trading the MES, the micro E-mini. And I always say, yep, trade that by all means, but chart the E-mini. Chart the E-mini, the most liquid market, and take your trades on the micro contract, the MES, instead. So here we go. NASDAQ daily chart at NQ.D equals 106XC, which means this is a day session only. That's the .D, and the equals 106XC. I like adjusting the rollover date so that we get the rollover day included in the rollover timing. That's a fastidious thing I am keen on, but that is the chart that we're looking at. This is the daily chart of the NASDAQ, and we're in an uptrend. We've been in an uptrend for a while. The background on the better indicators is printed in red, which means we're in an uptrend in terms of price and volume. Everything to do with price on the right-hand side based on beta sine wave, which is the plate of spaghetti below the price bars here. Everything to do with volume on the left-hand side with better momentum here. And we've got professional and amateur trades marked with yellow and blue bars on this side. And we're in an uptrend because we've got the trailing stop on better prim down here in red, and we're above that. So that means we're in an uptrend in terms of price. And all the bars are being printed nicely red on the price bars themselves here, which means we're in an uptrend in terms of price and volumes. And we're above our triple signal here, which is when we had our resistances in 3 different time frames broken. And so we're on a strong uptrend. have been for a while, been saying that for a while, and finally I think all the pundits have caught up. So where is this going? I think this is going to have some form of topping out this week, but in terms of the longer term picture, the bigger picture here on the daily chart, we have not seen a pullback to end even on the lowest time frame. So we've got to go see that. Potentially we could do that in the next week or two because we're coming down here to put in a support here on the lowest time frame. So let's see if we can go down the time frames and zero in and see where the weakness might happen. So 135-minute chart, again the Nasdaq, exactly 3 135-minute bars in a day session of the Emini or the Nasdaq. And here we go, we've got rainbow patterns leading into these highs, bang, bang, bang. So a rainbow pattern is when the average trade size is low, which means there are amateurs active, and this is a potential reversal of an amateur breakout. The breakout is being led by the amateurs, or it could be a breakdown going the other way, but the breakout on the upside is being led by the amateurs with these rainbow patterns here, so we've got to watch out. And I would say the low of the sequence of the amateur bars is the important level down here. So let's see if we get any weakness over the next week or two that breaks that level, because that would be maybe significant. We've not maxed out in terms of an exhaustion buy pattern up here. This move is being led by the amateurs, and they could easily be shaken out over the next few days or week and have some weakness where they would be wrong-footed and scared out of the market, and the professionals would step in at some point. So that's just be aware of that. We have reached a pullback trend on the lowest time frame on 135-minute chart here, and we will need to go through pullback to end of trend on the intermediate chart yet. So we're waiting for that when this comes down. So we got a little bit of weakness into that. Backing it down to the 45-minute chart here, you can see the background is black at the moment, dark as I call it, but we recently had gray where we had a downtrend confirmed in price and volume, and we've come back up, and I like these areas for a potential trade, and I call it an SR2 in the dark. So SR2 is where the intermediate time frame, which we've crossed here, you can see these slightly thicker lines here, that's an intermediate resistance, is going to plot at some point. In the dark here is when we've had a retrace here. We've had some weakness, but we're now going through a little bit of retrace in that weakness. That could come in over the next couple of days, and that could be interesting for a little bit of weakness, because on this chart, the 45-minute chart, we've had all of these signals. We've had our pullback to end of trends on the lowest time frame. We had two in sequence because the trend was so strong. Then we put in a pullback to end of trend on the intermediate time frame, and then a little one on the lowest time frame. We've come back down. We should be coming back down to find support on the highest time frame where these very thick lines come together. So we could easily have that weakness on this chart, the 45-minute chart, that leads to support being found on that highest time frame on this chart here. It's not the end of the end, because we haven't had exhaustion buy, blow off moves up here, a little bit of profit taken by professionals and so on. But that would be nice for a trade where we get the SR2 in the dark signal come in, and then we find support on the highest time frame here. A 15-minute chart has the added vertical solid yellow lines which show the beginning and the ends of the week. So 2 weeks ago we had a very strong week, ended up with exhaustion by bearish divergence. The week after that was a down week where we had a lot of weakness. This week we finally caught down here at 14,900 on the Nasdaq, and we had a nice strong rally. You can see here this was a nice little pattern where blue professional bars come in, take a bit of profit, and then they step in again. They realize, no, 15,000, this is all good, we're going to buy this, and we get a gap up on the daily chart here into amateur bars at these highs. And on this chart we're making out support to resistance on the highest time frame. Here we've had exhaustion buy, bearish divergence. So let's see if we get some weakness over the next couple of days based on that 15-minute chart. And then we're going to go down to the tip bar chart, but I need to show you this first. You adjust your tip bar charts based on the volatility, the number of trades in that particular market. On the highest time frame tip bar chart I look at on the Emini, it's a 13,500 tip bar chart. And that gives me roughly a 15 or a 20-minute chart on the Emini. But the number of trades that go through on the Emini is double those that we see on the Nasdaq, and I can show you this. The number of trades that we see on the Emini is roughly double what we see on the Nasdaq, so we need to change a tip bar setting for that equivalent chart on the Emini. What I've done on these charts on TradeStation is have this setting for volume, use tick count. So what this is doing is counting the total number of trades or ticks go through in a 24-hour session of the E-mini. So the E-mini at ES 1440-minute chart, which means that's a 24-hour chart here. And on average, I think this average blue line here is over the last 200 trading days. On average, there are 1.1 million trades go through on the E-mini in a 24-hour period. That equivalent chart for the NASDAQ is 500,000, 556,000 trades here. So it's roughly half the number of trades that go through on the E-mini. So consequently, we need to adjust the chart for the NASDAQ. And so instead of a 13,500 tip bar chart, in this case is a 6,750 tip bar chart of the NASDAQ. Again, vertical yellow lines for the beginning and the ends of the week. So that's the beginning of the week on the NASDAQ, and that's the end of the week. You can see here in that sell-off, we had blue professional bars coming in, bang, 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 eventually broke into that uptrend. It was a nice cyclical pattern here. We had a lot of reasons that the market would stop. Then we start breaking into some strength here with the background in red, and you can see that. And then we had some weakness, and we finally caught the blue professional bars, caught that breakout, and we ended up the week with exhaustion buy, bearish divergence, little cyclical pattern here with a pullback to end of trend on the lowest time frame, hitting into resistance on the intermediate time frame. And so that's finally an area that we are having a little bit of trouble getting through. So what does this all mean? Longer term charts, we're still in this uptrend. We've got a seasonal pattern at the moment, which gives us background strength probably until the end of the week. But locally, we have this little area of resistance that we might have touched. So potentially, we could have a little bit of weakness over the next couple of days, 2 or 3 days, but I would expect it to be caught and continue on in that rally. So we'll start with the Forex charts first. This is the setup of the indicators where we've got them all on one chart. And we use the best of 3 indicators to generate signals here. So we'll talk about the Euro first. Euro, we had a signal midweek that was a bit odd because it happened when the background came in as oversold with red here on this combination of indicators. But it wasn't a classic because we had our exhaustion sell signal here, bullish divergence here. Blue professional bars came in at the lows down here, and so it failed quickly, but blue professional bars came in here and we started to rally. I think this is going to work out in terms of a trade for the euro because I think the Forex charts are pretty strong at the moment, but that was an odd signal that came in on the euro. British pound was more of a classic signal down here. Exhaustion sell, bullish divergence, we're oversold, background in red. We've got blue professional bars coming in at the lows down here. We eventually break that and we're into an uptrend here on the British pound. So that's good. We had weakness at the beginning of last week and that finally finished out with this signal long at the end of this week on the British pound. Aussie dollar hasn't signaled this week. We had the weakness after last week and this signal here, which was good. But on the lower time frame chart, so a 300 tip bar chart on the Aussie dollar, it has actually gone off. And I actually might show you that here because I traded the Aussie this week with a short trade and then in reversal to a long trade here. So here we go. This is this week's trade on the 300 tip bar chart. Let me just go back a little bit. There we go, beginning of the week here. And that was the short trade that I took. And then we had a whole confluence of signals going on down here on the Aussie at 66. And so I'm long the Aussie at the moment. So in terms of the Forex contracts, I think we've got strength in the risk-on trades and weakness in the USD. Japanese yen, still not signaled again. I've been talking about this over the last 3 weeks now, where we cannot break the trailing stop. We keep on seeing exhaustion sell patterns, blue professional bars coming in. We come back up, but we can't get through our trailing stop and we lose it again down here. So we've not got exhaustion sell signals down here on the Japanese yen, so it might try to have a little bit of a rally here, but it's not going to be a classic signal down there. So that's the Japanese yen this week. E-mini, we're not going to talk about that. We're going to talk about the NASDAQ instead. So this is the NASDAQ on the 6,750 chart with this week's activity here. We had some weakness here, didn't really play out. That was exhaustion by getting the move going out of these lows. So that's not a topping out pattern that we would have like this. So those spurious signals didn't work out and we've rallied again. But we do have some of these things coming together. We've got exhaustion by bearish divergence. We've got blue professional bars and the trailing stop come up. We're overbought here at the background in gray. That does mean we've got weakness of potential signal on the NASDAQ to go short. So let's see where that goes. 10-year notes this week, a little bit junky. We had an early signal here on 10-year notes to go long. That didn't work out. We've fallen down here. This is more like it in terms of bottoming activity with more blue professional bars come in here. So the 10-year notes signaling long at the moment. Then gold. Let's go to gold. Signals this week, nice pattern down here. These ones ran out of steam. Talked about this with last week's video. I was surprised with all those blue professional bars. It was just an opportunity here to take short positions here in the market. Weakened quite nastily. Blue professional bars kind of come in here on the retrace and on the retrace, and they sell it down. But down here at the lows, actually, as I'm looking at this, there's not a lot of blue professional bars down here. We just have them at the end of the week and here midweek. So let's see where gold goes this week, but that's signaling long. Silver at the moment, again, that's that trade where it just maxed out with blue professional bars coming in here and then selling it down. We've come back down to these lows. We've not had exhaustion sell down here on silver yet, so it's not going to generate a signal on silver. And then Bitcoin 2 weeks ago, back here on the 16th, and that led to this big rally up into 31.5. Last week we had short signals at the beginning of the week. Didn't really go very far. We had a little bit of a flash crash down here to 29.5 there, and we've recovered from there. So it looks like we're currently in an uptrend in Bitcoin. So let's see where that goes. Crude. What did crude do this week? Yep, last week we had short signals that maxed out down here at about 67. And we've got the reverse going on here. Exhaustion, sell, bullish divergence, a flush pattern. And we're oversold with the background in red. And then we got our triple signal as soon as we break through the trailing stop on Beta Pro-Am. So we're in an uptrend on crude at the moment. Natural gas, where did we get to this week on natural gas? We almost got up to $3. We got to 2.95 up here. No signals over the last couple of weeks on natural gas. And copper, what's copper up to? A nasty little sell-off from $4 here, but we didn't have a signal because we didn't have exhaustion buy. Not a whole bunch of blue professional bars up here, but you know, a couple maybe there. But now at these lows down here, we've had a signal generate. A whole bunch of blue professional bars coming in at 370. So copper's looking interesting this week. And then the ags, let's look at corn. So signals last week and beginning of this week, short, bang, 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 and a really rapid collapse in corn there. Soybeans doing the opposite, but a whole bunch of blue professional bars, exhaustion buy up here. So let's see if that rolls over with soybeans this week. And then wheat, again, sold off pretty hard, but not a classic top up here. No blue professional bars at the highs, no exhaustion buy down there. And instead what we've got the beginnings of the bottoming down here at 656 with blue professional bars coming in. So there we go. Bullish on Forex at the moment. I'm long Aussie, and I think we're going to have some good moves in maybe the euro, British pound, Aussie dollar this week. Equities, maybe we'll get a signal in the first couple of days. A signal short, but how far it'll go given the bullish background that we've got, I'm not sure about that. And then maybe we'll get some strength in copper this week. Maybe crude as well will continue to rally. So with this week, Monday's going to be quiet. Tuesday's going to be very quiet. Trade really won't start to pick up until Wednesday, and we could wait and see how things go. Anyway, hope your trading is going well.